Hey everyone, welcome back to Corporate Decoder, the place where we dive into the world of corporate filings. Today we're cracking open Hudson Technology's annual report. After this report, it will feel like you are entering the matrix itself with these revelations. Hudson sells and reclaims refrigerants, and this filing will tell us if they are making any money doing it. Expect to learn about financial health and future direction. Hudson Technologies just dropped their Form 10K, basically their yearly health checkup. The report covers everything from what they sell to the risks they face. Think of it as a year in review, but with lots of numbers. First off, some basics. They're based in Woodcliff Lake, New Jersey, and their stock trades under the ticker HDSM. They are an accelerated filer, meaning the SEC considers them a medium to large size company. Also, their filings are all up to date. Now let's dive into some potential trouble spots. A big risk is fluctuating commodity prices for refrigerant gases. If prices drop, Hudson could be stuck with a lot of expensive inventory they can't sell for a profit. It's all about supply and demand, and Hudson's success depends on predicting those swings. Another major risk is debt. They have a credit facility, kind of like a credit card for businesses, that's secured by pretty much all of their assets. If they break any of the rules of that credit agreement or can't pay it back, the lenders could take everything. They might need more financing in the future, but might not get it when needed or at the price they want. And here's a fun one, environmental liability. Refrigerant recovery is a business with risks, which means if there's a spill, a leak, or any kind of environmental problem, Hudson could be on the hook for big damages, regardless of if it was their fault. The future is not clear. One of the biggest dangers facing them is that refrigerant sales are greatly regulated, and if those regulations change or are relaxed, it would tank the need for their product. A few changes in what the government dictates would devastate their sales and revenue. They also acknowledge that their IT systems could fail or suffer cyber attacks. It's 2025 after all. If that happens, Hudson could have a really hard time doing business, and that can cost them both money and their reputation. Speaking of physical locations, they own and lease a number of facilities. Their headquarters are in Woodcliff Lake, but their key operations are in Champaign, Illinois, Smyrna, Georgia, and Ontario, California. Now let's scroll down to the actual results. There was no cash dividends declared. The Nasdaq Performance Index shows the stock performance is generally in line with the Nasdaq Industrial Index, which is neither good nor bad. The share buyback program is important because the market loves stock repurchases. They bought back almost 1 million shares of their own stock for about $6 a share in the last few months of 2024. This leaves $10 million in shares they may purchase in the future. Here's the meat of the report, the financials. Revenues came in at $237 million for 2024. The revenue fell almost 20%. Cost of sales also declined, but net income almost halved, from $52.2 million to $24.4 million. Looking at the balance sheet, cash is up a lot and inventory is down a lot. That might sound good, but it suggests there is a problem with sales that cause the inventory to sit around. Cash from operating activities increased a lot. This is a great sign because that's real cash that the business is making. The interesting part is that a lot of the cash that they aren't using is from debt repayment. The company has little to no debt, so I think they are set for financial success. The amended Wells Fargo facility will expire in 2027 and there are no loan defaults. They are in good standing. This facility allows a lot of loans which may be used for inventory or other uses. The company also employs 12 persons engaged full-time in quality control and to monitor the company's operations for regulatory compliance, which is a good measure of keeping up to date. In addition, the director of IT has over 25 years of experience, so security is in good hands at the company. They have a few subsidiaries that keep the business running, such as Hudson Holdings, Inc. and Hudson Technologies Company. Now for the grand takeaways. Hudson's revenue and profit declined a great deal, but they are financially stable thanks to reduced or removed debt. They are following the new and ever-changing regulations and they are doing what they need to stay relevant. From a bird's eye view, Hudson Technology seems to be at a crossroads. They've built up a solid position in a niche industry, but with sales dropping and big changes on the horizon due to new environmental laws, they will have to continue innovating and adapting to keep up. The long-term success depends on whether or not management is up to the challenge. I hope this clarified it for you. If you enjoyed this, please subscribe for more corporate deep dives and analysis. Give us a like to help spread the word and leave your thoughts in the comments.